Ever pondered how banking functions in a world where interest, a cornerstone of conventional banking, is considered unlawful? Welcome to the world of Sharia banking, a system that operates within the principles of Islamic law. Sharia banking, also known as Islamic banking, operates on the core principles of fairness, transparency, and risk sharing. These principles are not just theoretical constructs, but practical guidelines that influence every financial transaction within this system. Firstly, the principle of fairness. It is a fundamental tenet of Sharia banking that all parties involved in a financial transaction should benefit equally. This is starkly different from traditional banking, where the bank often benefits more than the customer. In Sharia banking, the concept of riba, or interest, is considered exploitative and is prohibited. Instead, Islamic banks earn profit through trade based on a mutual agreement between the bank and the customer. Secondly, transparency. In a world where financial jargon often creates a smokescreen, Sharia banking insists on clear, straightforward dealings. Each transaction must be free from ghara or uncertainty, ensuring that the customer fully understands the terms and conditions before entering into a contract. Next, let's talk about risk sharing. Unlike conventional banking, where the risk lies predominantly with the borrower, Sharia banking promotes a shared risk model. In an Islamic mortgage, for instance, the bank and the customer jointly own the property. The customer then gradually buys out the bank's share, ensuring that both parties share the risk equally. These principles of fairness, transparency, and risk sharing are pillars that uphold the integrity of Sharia banking. They ensure that banking is not just a business, but a service that respects the rights and interests of all parties involved. In summary, Sharia banking, a system deeply rooted in Islamic law, offers a unique approach to banking. It prohibits the practice of charging interest and encourages profit through trade. It insists on clear, straightforward dealings, free from uncertainty. And it promotes a shared risk model where both the borrower and the lender bear the risk. In a world where ethical banking practices are increasingly sought after, the principles of Sharia banking offer a refreshing alternative. By prioritizing fairness, transparency, and risk sharing, this system not only complies with Islamic law, but also champions a more equitable approach to banking. Remember, finance doesn't always have to follow the same old paths. Sometimes, it's the road less traveled that makes all the difference. And in the case of Sharia banking, it's a journey towards a fairer, more transparent and equitable financial world.